nous avons pensé que, principalement, nous avons convenu qu'il y a des modèles qui existent, qui sont fonctionnels et qui peuvent apporter beaucoup de plus-value dans nos institutions, mais il faut qu'on soit d'accord sur les meilleurs moyens de les mettre en œuvre et de les passer à l'échelle. Donc, nous avons pensé qu'il faut créer d'abord, au niveau de l'AFRACA, une base de données sous forme de plateforme des meilleures pratiques et modèles de finances rurales et agricoles. Ça peut être sous forme une plateforme technologique, n'est-ce pas, accessible à tous les membres de l'AFRACA et même au-delà. Dans cette plateforme, nous aurons les meilleurs modèles qui ont réussi, n'est-ce pas? Et ces modèles réussis procéderont d'une étude et d'un examen minutieux de choix, n'est-ce pas, qui en fait, à la fin, ces modèles-là pourront être implémentés et configurés dans cette plateforme où tous les membres auront accès à choisir le modèle qui soit en phase avec leur stratégie, leur plan stratégique et leur volonté de mise en œuvre. Donc après cela, nous avons en fait proposé de faciliter des visites d'échange et d'études auprès des institutions ou centres d'excellence. L'AFRACA, à partir de ce moment où la base de données existe, où les offreurs de modèles et les demandeurs de modèles sont présents et peuvent choisir les modèles qui leur convient, doit aussi, l'AFRACA, faciliter des visites d'échange afin que les institutions ou les projets qui auront besoin de ces modèles-là puissent se rendre dans des institutions ou dans des projets ou dans des centres d'excellence pour de visus mettre la main sur ces projets-là et bénéficier d'une formation et d'un coaching qui pourrait leur permettre de pouvoir arriver au niveau à domicile, pouvoir mettre en œuvre ces modèles-là. Mais en plus de cela, il faudrait aussi que AFRACA puisse faciliter la mise à disposition d'assistants techniques, n'est-ce pas, auprès de ces centres où les institutions pourront aller voir ces modèles-là, que des ressources de ces centres-là soient disponibles ou de ces institutions, n'est-ce pas, sous forme d'assistance technique pour supporter la mise en œuvre, le transfert de technologie et le coaching pendant au moins un bon nombre de mois, 3 mois, 6 mois, avec que l'institution qui est demandeur puisse pouvoir implémenter et mettre en œuvre de façon efficace ces modèles qui seront choisis. Donc, maintenant, pour ce qui concerne le champ d'excellence, le groupe A a choisi, premièrement, on avait demandé 2, mais nous, on a proposé 3. On est heureux. En fait, il y a le Kenyan School of Monetary Studies. Ils ont enseigné tous les modèles de finances rurales et agricoles articulés avec les TIC, les nouvelles technologies de l'information et de la communication, n'est-ce pas? Cette institution a beaucoup d'expérience en la matière. Donc, premier élément. Deuxième élément, nous avons la BNDA au Mali. Certains membres de notre groupe, notamment le président, a eu à faire une visite d'échange auprès du BNDA Mali. Ils se sont rendus compte que c'est une institution qui a des modèles, des process aboutis et réussis en matière de financement du riz, n'est-ce pas, dans lequel ils mettent des concours très importants. Le financement à la filière riz. Il y a aussi la bourse des valeurs agricoles de Johannesburg. Bon, nous avons eu un peu à prendre connaissance de ces bourses-là quand on était, je pense, en 2013 à Pretoria dans le cadre de l'AFRACA. Nous pensons que tout ce qui est certificat de dépôt, n'est-ce pas, des titres échangeables sur les matières premières ou sur les récoltes pourraient être implémentés dans un certain nombre de pays si, en fait, nous bénéficions de l'expérience de la bourse des valeurs agricoles de Johannesburg. Je vous remercie. Si les membres du groupe n'ont pas... C'est bon?
Okay. Thank you. So that's a good start. We've already identified not only 3 centers of excellence, but also why they're centers of excellence. And we have a couple of clear and, I would think, actionable recommendations. Next group, who's ready? Did we number the groups? Or, please, from Navards.
Good evening, everybody, and thank you very much for the opportunity given to us. Uh, we were the group 5, and we had representation from 3 countries. We 4 from India, representing NABARD and NAPCONS, the subsidiary of NABARD. Then we had the representation from Rwanda and Kenya. These are the 3 countries in our group. As regards the first recommendation, I would like to just take you through a little bit of our Indian experience, because these 2 days, I think, apart from Dr. Das, we didn't have much of our Indian experience to share. I thought just a couple of minutes I will share what policy approach that India has taken as regards addressing the various issues which confront Africa and India. Most of the issues and challenges remain the same. But what had been our policy approach at the central and the provincial level, I thought maybe I will share. What is the approach that at the central level we follow in India is for expanding the agricultural credit is we have a multi-agency approach where basically it's a formal institutional mechanism which we insist that they should lend to the agricultural sector. So that is the fundamental difference in most of the countries and India, where it is a very strongly bank-led model that we follow. We have a very strong banking network in our country, which starts with the Reserve Bank of India, the regulator, under which we, the NABARD, which is the apex level development institution, which is a development financial institution for agriculture and rural development households in our country. And we have 30 federal states. So that scale is itself a challenge for us. Since we have a large number of these smallholder farmers, we have, from last year, we have also given a target to the banking sector that 8% of their net bank credit should go for the smallholder farmers. We have also fixed a target for 7.5% for the micro enterprises, which are set up at the village level by the micro entrepreneurs. So these are the 3 broad targets, apart from which we also have a 10% target for the weaker sections of the society. 10% of the net bank credit should go to this section. So these are the 2 ways that we try to address and expand the agriculture and rural credit base through the regulated entities and through this mandated lending program. And coming to the interest rate, our farmers in India, they get it comparatively cheaper. If I am right, if I am wrong, you can tell me. Our farmers typically get an agriculture loan at 12% per annum. And also we have a scheme, although it is deregulated, after regulation the interest rate has stabilized at 12 to 13% maximum. And we have a scheme, the central sovereign government has introduced a scheme called the interest subvention scheme, where the prompt repayment, if the farmer is paying his dues promptly before the due date of his loan, then he gets 3% exemption. And for any short-term operation of his agricultural production, if he is taking up to a 300 lakh rupees, 300,000 rupees from the banking sector, he gets the loan at 7%, which is subvented by the central government. The subvention is operating at 2 level. The farmer gets the interest of 7%, plus if he pays promptly before the due date, he gets additional 3% benefit. So this is how we try to incentivize the agricultural lending to the farmers. And coming to the other part, we have a very fantastic scheme which probably did not come out so well, the insurance. Recently, our central government has launched this scheme, which is called the Comprehensive Crop Insurance Policy, which is unique in its sense because it is compulsory and mandatory for every farmer who is availing of a bank loan for the agricultural purpose. If he is taking a loan from the bank for agriculture, he has to mandatorily be covered under the crop insurance scheme. It's not that the other farmers who are not taking the bank loan are not covered, but it is voluntary for non-loany farmers and it is compulsory for the loany farmers. And the premium that he has to pay is highly subsidized and it is debited to his bank account and remitted to the insurance company. And the insurance coverage covers almost all types of risk that the farmer faces and the institution in turn face in agri-lending. So this is how we have tried to mitigate and mitigate the risk in lending to the agriculture sector by comprehensive crop insurance, which is compulsory. So this is a good feature, I thought, in India, which we have done. And the second thing that we do there is increasing focus on the term lending, which is called the investment credit. Because we have increasingly realizing that unless the investment goes to the sector, unless formation, as creation takes place in the sector will not be able to grow at the rate the nation wants it to grow. Supposing if we are envisaging a growth rate of 4% of agriculture GDP, we must invest in the agricultural sector, which is the capital output ratio. If you calculate, our planning commission has fixed 1:4. That means to get 1% agri GDP, you must invest 4 times of your 4% of that agri GDP on that. So increasing trust we are giving on the investment credit part, not on the short-term loaning, which is purely for the production purpose that the farmer takes. So this is one aspect which I think it's also should constitute one of the recommendation, that more and more trust should be given for investment credit than the short-term production credit, because of creation and capital formation in the agriculture, which is very important. The third innovation that has taken place in our country is, which is really very important, which is called the Kisan Credit Card, which in other words, in English, if I say it's a farmer's credit card, like you and me having a credit card in our pocket, in our country, the farmer also gets a credit card, which is called the ATM-enabled card. Each farmer who takes a bank loan gets a ATM-enabled card. He can walk into any micro ATM and withdraw his limit. And that is a flexible card which is given to the farmers. It is purpose neutral, but the limit is fixed based on what agricultural activities and what agricultural operation is carrying, for which we have a unit cost, we have a scale of finance for that particular operation. Based on that, a quantum is arrived at, and the credit card limit is fixed. Like you and me, we all have a credit card limit. The farmer also gets a limit which is valid for 5 years. And the security norms are also relaxed, because the bank has to do the security procedures only once in 5 years. So this is a very flexible product, both for the bank and the farmer's hand. So this product also, we as the group, we discussed, we can recommend this. The KCC as the flexible credit product which suits the farmers, which suits the financing institution. So this is another innovation which has taken place. And also to address the credit needs of the farmers who do not own land. The banks do not give you loan unless you have the land. But here I believe the farmers are given land on lease. But there also we have the system, but predominantly most of our farmers have their own land, and if you do not have their land, the banks were not giving loan. To tide over this, one product that we gave the banking industry was called the Joint Liability Group, where this tenant and oral lessee farmers will come together and they form a group, and no hard collaterals are required. Only the social collateral, which is built as the group, stands as the guarantee for all the members. So this is KCC and JLGs are two innovative financing products. I would say the credit delivery mechanism that we have come out with in India, which we recommend that can be considered. Then coming to the institutions of excellence, which we discussed from Kenya, we discussed from Rwanda, but the two distinct institutions which immediately came to our mind, I shared with my members in the group, is NABARD at the apex level, and the Bankers Institute of Rural Development. We have a training institute in India which caters to the skill development and capacity strengthening of all the functionaries and the banking and the other sectors purveying agriculture credit. Not only that, even we also cover the civil society organizations who are also involved in agricultural development. So it's a excellent training center. I think the collaboration is going on between AFRACA and NABARD, the board. We have come and explored the possibility of setting up such an institute in Africa to cater to the training and capacity development requirements here. And the second institution, which is of course again a subsidiary of NABARD, called the NAPCONs, they undertake various consulting assignments. We have undertaken a lot of consulting assignments in Africa. So this is another institution of excellence. In BIRD, our Bankers Institute of Rural Development itself has a organization called CPEC. It's a center of excellence in cooperatives, specially dedicated for rural cooperatives personnel for their capacity development. So one institution is NAPCON's BIRD, and the second is NABARD. Why I say NABARD? Because NABARD is the apex level development institution. We play a very positive role in policy advocacy, in giving policy suggestions and policy actions to the central sovereign government. We also have a credit plus approach in our system. We just don't lend, we refinance to the banking institution, but along with that we also develop replicable models, and we create a market for the credit so the banks get interested. Some of our initiatives which are very well recognized at the watershed development, at the tribal development, and these are, and SHG of course is one of the thing which is well known to the world. So this development initiatives is bundled with our credit thing, so it creates not only the, it doesn't just increase the credit efficiency, it also creates a market for the credit. So somebody was asking me whether NABARD is a profit-making institution. Yes, we are a financial institution, we are a profit-making institution, we have a very strong and healthy financials. Because we strongly believe only healthy and strong financial institutions will be able to deliver credit in a more effective way. So one of our focused attention is institutional development of most of our client institutions. So that is one of our thing. And the 2-3 recommendations, quick recommendations. One is there has to be a very strong and robust database for the agricultural sector, which is lacking in most of the countries. That is the primary information and reporting system, and the intervention of ICT. With all this, all the institutions that are supporting the agricultural sector in terms of lending and other non-credit activities should be ICT enabled. That is another suggestion. Crop insurance is one of the third suggestions that we are giving. And Kenya and Rwanda experiences, the government is playing a major role in irrigation sector, in the livestock sector, the government role is predominant. The Kenyan people have a challenge in the transparency, the rate of interest which the government gives to the fund to the intermediaries which they lend to the ultimate borrowers, the rate goes up much to the dislike of the farmer. So that is the challenge they were facing. So these are some of the recommendations which are embedded in my presentation, and thank you once again very, very much for this short and tiny opportunity given to us. Thank you all.
Thank you. Thank you. So we seem to be working our way down. Next group here, please. You will be after.
Thank you. My name is Anastasia Kimtai, Director Regional Banking, KCB Bank, Kenya. We have 3 recommendations directed to 3 actors. And the 3 actors are government, private entities, apex bodies, organization, and professional bodies. So the first directed to government are, the government needs to have political will to fast-track these initiatives. The second recommendation is that the government needs to create a catalytic fund for agriculture. This is to start a process that will facilitate and mitigate risk. Those are the 2 recommendations to the government. The second recommendation is to the private sectors. And we said agriculture can only be revolutionized through involvement of the private sectors. And the recommendation to the private sectors are they need to provide funds. Second is they need to invest in latest technology so that agriculture has a swag. That means to attract the young generation to go back to the farm. Third recommendation is to the apex and professional bodies, and we say that institutions like AFRACA needs to push for workable models so that some institutions who don't know the existence of these models can learn and fast track and run with the workable models so that everybody doesn't have to reinvent the wheel. The second is they need to bring into place all the key stakeholders under one roof so that each and every stakeholders in agriculture understand what the other one is doing. Second question was the workable models. The first workable model was by the Nigerian Central Bank that provides developmental funds to fund specifically agriculture. Initially, developmental banks could not lend to agriculture without collateral. So what the Central Bank of Nigeria did, they created an institution from inside Central Bank. And the role of this institution was to mitigate risk. Banks needed to make funds available, and this institution had to come and share the risk. This led to reduction in interest rate charge, and the state pays part of the interest. This was to reward good farmers, because what we have been told by the chairperson is, initially when they were giving out grants like fertilizer. Some of the politicians were going to give out this fertilizer, and nobody was using it for productive agriculture. So in this situation, they were actually driving agriculture to ensure that there was production of agriculture. And they called it hand-holding the farmer into productive agriculture. The second one comes from reward states, states that come up to support farmers by bringing down the interest rate. So these were states that made agriculture, access to agricultural funds easy. What they did, they graded the states, and at the end of the year, they actually came up with a mechanism that could rank the states. Majority of the governors felt excited about this initiative because what it means is that the governors could go to the populace and say, since I've been rewarded as the #1 state in agriculture, then you can give me the vote. So that really drove agriculture, and for the politicians, they got their votes. The third item is from Rwanda, and this is pre-financing of washed coffee. Central Bank of Rwanda allowed coffee traders to loan out money at low interest rate and then buy back the coffee. This led to big numbers of cooperatives and stations for buying coffee, and it led to increased coffee exports. And this, what motivated the traders was their guarantee of coffee, but for the farmer, the interest rate was far, far lower than what the commercial was charging. The fourth item was Central Bank of Kenya, whereby it supported the M-Pesa innovation, which has led to banks offering unsecured loans at very, very low interest rate without the need of the customers to visit the brick and mortar. You can actually get that loan using your cell phone. The fifth one was the Business Development Fund in Rwanda, whereby it has guarantor funds to agriculture specific, and these were the ones who are promoting export. So this is to reward good agricultural business behavior, but the person who was in the group will clarify that further. And the second last is Bangladesh, whereby every state bank of Bangladesh was to actually give a given percentage of the funds to agriculture without the need of collateral, and this was at a reduced interest rate. And finally is the one for capacity building, whereby Kenya School of Monetary Studies does carry out some training which is certified in agricultural finance. This is to enable banks, because many presenters have stood here and said banks do not understand agriculture. So what they did was to enable banks to understand agriculture and how to lend to agriculture. Through administration of this certified training, they've been able to attract donor funding to roll out this to more banks across Africa, not Kenya only. The last question was to discuss and identify at least 2 centers of excellence. And the one we identified was the training institution, and precisely or specifically, Kenya School of Monetary Studies. And the reason is because they'll be able to empower people with knowledge, carry out research and development initiatives relating to agriculture, and share best practices. They'll also be able to drive and lobby the government in policies relating to agriculture, can also carry out capacity building for farmers and off-takers and other key players in the value chain of agriculture, and they can become advocates of agricultural policies. Thank you.
Thank you. Will be the next one. So we're making the list of centers of excellence. 2 votes already for KSMS. Will someone tell them?
Thank you very much. My group is group number 6, and some of your recommendations have been listed with the former group. Then I will just focus on a group on which are not listed yet. Okay. The first one for us, which is very important, is setting up Apex Development Bank with comprehensive mandate for developing and financing agricultural finance and
enterprise also, agri-enterprise also, and also allow those apex to focus on replication and upscaling innovation and various models of rural finance. The second one, in the 2 days, we talk about training, and for us to scale up the key recommendation is very important to have in each country a training center to strengthen the capacity of rural institutions for effective delivery of finance in rural. And the third one, which is not listed yet, is for us it's very important to encourage to incentivize bank to recognize banks who are giving best service in rural development by giving them some incentives And about the second question, which excellence center, for us we identify two things. In the 2 days it was said that policy is a key element to develop MFI and also training. Then for us it's very important to have a center for policy research in Africa. We don't know which center, but for us it's very important. And the second one is to also have a center of excellence in training and innovation technology in rural finance. Technology innovation is very, very important for us because we know that things are moving very fast and we have to adapt our approach. Then it's important to have a center which can address this issue. Thank you very much.
Thank you. We have, if I counted well, 2 more groups to go.
Investment. We had a case of BDF yesterday, where BDF provides guarantee funds. So we think that government will to support agricultural investment is critical in rural financing. The second point is on change in mindset. Financial institutions need to know who they want to support, who they need to work with. We think that in the past, we thought that in the cannot work in all agricultural value chains. We heard today that you could probably choose to support one agricultural product, say for example maize, beans. You don't have to invest in everything, but choose one value chain and support that value chain. The other point is, sorry, I can't see. Partnerships among stakeholders. I will give an example. I work for a dairy project in Rwanda, implemented by Landolex. We have largely succeeded because of partnerships. We have worked with everybody in the daily value chain, including government and private sector. Our success has been achieved because of partnerships, and we recommend that to all participants here. The other key factor is training. You need to provide training to all stakeholders, including the service providers. The service providers, I mean financial institutions. You need to let them know what type of products they can evolve, but on the other end, you also need to train the beneficiaries, the farmers who are involved directly in agriculture. So capacity building is key. The other point came from a colleague from Islamic banking. He suggested, and actually we believe as a group, that sometimes you need to tailor products that are targeting specialized groups of people. Because sometimes there's exclusion because of religion, exclusion because of gender. So sometimes you need to develop products that are specialized in order to increase participation. The other point is AFRACA should have a member championing Islamic finance agenda and have a product plan for Islamic agriculture and rural financing. This is more like a recommendation for us, for AFRACA. I think you can pick it up as committee members. Then, this was discussed earlier in the day, probably yesterday, that we need to recognize banks that are coming to the forefront in agricultural financing. For example, in Rwanda, we gave a case for BRD. Personally, I propose the example of Workable Opportunity Bank because I work with them. I know how much they've invested in the dairy sector, and because of them, because they've accepted to take lead in dairy financing, I can see other banks coming on board. So in Kenya, we gave an example of KCB, and in Uganda, Centenary Bank, and CRNDB in Tanzania. So we need to recognize banks that are already taking lead in agricultural financing so that we encourage them and inspire others to come on board. Centers of excellence that have been identified include Apex Bank Limited, which regulates 76 banks in Sierra Leone. This bank has supported access to finance. The details you can pick. The other activity this bank has helped to increase marketing linkages, and they've been willing to learn from others. The other example we've given is the case for Rwanda. Came from me. As a value chain practitioner, Landolex has been at the forefront of encouraging dairy investments. This hasn't been very easy for us, but with collaboration with everybody involved in the dairy sector, including government, we've been able to actually achieve some milestones. We have, initially when we started, we mapped out the value chain, daily value chain. We identified opportunities, investment opportunities, right from production to marketing. And after that, we identified partners who would work with. These partners include value chain players and financial institutions. Then we trained them on different products that they could be developing.
Well, thank you. As I said, there seems to be no lack of things that work. So little excuse not to do more in agri-finance, more in different sectors, and more in different structures. So, well, we have one group to go, if I counted well. Unless if a group has gone completely underground. I counted 5 groups, and we were supposed to have 6. We've had, I think, only one French-speaking group. Did they merge? Okay, so group number 6 apparently has been taken over by another group. So we'll consider their recommendations to be already given. Well, there's not a lot for me to say. Said it all. What I would just like to reiterate is that there is a pretty sound set of recommendations from all of you. Those recommendations speak to different parties. They speak not only to others. It's very important. Sometimes at conferences, people have the habit to make recommendations that don't concern them. It's always someone else who has to do something. I think in this conference, you've come up with recommendations that concern yourself. So recommendations here concern all the different stakeholders in this room, recommendations for governments, recommendations for banks, recommendations for other stakeholders, and recommendations for AFRACA as an organization. In other words, all of us have recommendations to take back home. We've seen that there are good cases that we would like to hear and see more about because they found they are centers of excellence which can inspire others. So unless if there's anyone else who wants to come with some last minute recommendations, statements, declaration, as far as I'm concerned, this is the informal closing. Comes a little bit awkwardly behind the formal one. Again, I would like to thank you. I'd like to thank AFRACA. And then I would like again to thank you because you are here. You are here 2 hours after the conference is officially closed already. And you are here in big numbers and you still do a pretty good job. So continue doing that back home, back in the office, and make it work. So thank you. And John, you want to have some housekeeping, including for the dinner tonight?
Thank you, Lamont. Yes. Now you qualify to be a dinner. Yeah. So very quickly, I know most of you have been asking us about the presentations, how they're going to get them. So we are compiling all the presentations. We will be emailing. We are going to use like 3-4 channels to disseminate this. Emailing. We're going to do it on a Dropbox. I hope most of you have a Gmail account or can access the Dropbox. And we're also going to put it on our website. Okay? So I'm sure you will get them. I know the ones who are in
who want to get photos, the coverage, some videos, remember to leave your emails to our protocol people so that they can send you these photos of the conference. One last thing, I'm going to request you once again to stand up. Please stand up. Shake the hand of your neighbor. Shake the hand of your neighbor. Very strongly, yeah? And tell your neighbor, congratulations. You had a fantastic session. Thank you very much. And enjoy the rest.